Hey, this is Larry Hughes here, your friendly neighborhood real estate and mortgage broker. And today we're going to be talking about the home equity conversion mortgage, or better known as a reverse mortgage or senior home loan backed by FHA. We're going to be talking briefly about what is it and how it works, frequently asked questions, benefits, reasons why people take a reverse mortgage, and then finally, what's next now? What do you do after you know all this stuff? So, just a little bit about the reverse mortgage and how it came to be. This is the timeline and three dates coming into play: 1970, 1998, excuse me, 1988, and 1996. These are just events and times that things were established for reverse mortgage. We won't go into too much detail in that. We'll get to the meat of this presentation. But and for most people, their home is their biggest lifetime investment. But I have a question. In order for something to become or considered an investment, it must at some point pay you, right? If you just pay into something and get no monetary benefit, is it really an investment? With a home equity conversion reverse mortgage, you as a senior can make this home a real investment. You have that opportunity. So, who is eligible for a reverse mortgage? Pause for a moment and take a look at the picture. And what do you see? Old people, right? Now I say that as a term of endearment, as I hope to for the and pray for the blessing of becoming old one day. I'm 50 as of the recording of this video, but I want to become a senior at some point because that's a good thing, right? So who is eligible for reverse mortgage? Well, homeowners who are at least 62 years old, live in your home as your primary residence, and have a significant amount of equity in your home. That's who's eligible for a reverse mortgage. One of the things I hear our seniors ask me the most, or one of the first questions they ask me most, is because of the negative connotation that the reverse mortgage had previously, is can I ever be forced out of my home? And the answer to that question is absolutely not. However, you are and will be required to do a few things while in the reverse mortgage program, like again, live in your home as your primary residence and not be separated from your home for more than 12 months at a time. Keep the home adequately insured, meaning that you have insurance on the property protecting your interest and the bank's interest. Also, pay your property taxes, because if you don't pay your property taxes, you or the county, the city, or the state can take your property, right? And maintain the property in a livable condition with no health and safety issues and no deferred maintenance. So those are the things you have to do during the lifetime of the reverse mortgage. But again, you cannot be forced out of your home. The bank or lender does not take possessionary interest of your home. So unfortunately, many seniors find themselves house rich but cash poor. And this is an opportunity for them, this home equity conversion mortgage, is an opportunity to change that. So many seniors have owned their home many, many years, 25, 30 years, 35 years, and probably paid off their home, which gives them a lot of equity. Um, but what really is equity? Can you take equity to the grocery store and help you purchase some groceries, or to the gas company and pay your gas bill, or your light company pay your light bill? The answer to the question is no. So equity to me really is tied up money. So some of the seniors' concerns when considering reverse mortgage are the day-to-day cost of living increases. We know right now we're living in inflationary times. Inflation is high. As a matter of fact, senior Social Security is set to give seniors like yourselves the biggest increase in, I believe, 40 years coming up in 2023. Um, so seniors again find themselves on fixed income, and if their income grows, it doesn't keep up with inflation. So as a senior, you know life isn't over. You still want to enjoy yourself, so you want options. With this reverse HECM line of credit, reverse mortgage, you have those options. Let me ask you a quick question. What do you think about when you hear the word money? Do you think I have too much money, I need to give some away, or if I had more, I could do more with it? I could, do more things with it. What would you do differently if you had more money? Well, um, so there are two major ways from getting cash from your home. So this investment slash home that you've been paying for many years can work for you now, right? Most people, again, consider two ways when thinking about getting cash from their biggest asset or biggest investment, their home. The first is they could sell their home, right? They can sell their home and keep the difference between what they owe, if they don't owe anything, get the sales price, and downsize, moving into a smaller house. Maybe you lived in a 5, 6 bedroom home and the kids are gone, you're an empty nester now, and you want to sell the family home and downsize. Or you could get a home equity line of credit, right? Home equity line of credit, you have to make payments on that home loan or that line of credit, pass a credit check, and if you don't make payments on that line of credit, you're at risk of foreclosure and losing your home. But that is another way of getting making that investment pay off for you, right? However, now there's a third way, and it's called a home equity conversion mortgage, or the government's acronym again for home equity conversion mortgage, or another way to say the reverse mortgage. With the home equity conversion mortgage, you never have to pay it back. As long as you live in the house and follow the other rules I mentioned previously, you keep your home as your primary residence. So, so some of the ways that reverse mortgages are used is to improve the standard of living of a senior. Maybe help family members and loved ones out because you have an increased amount of cash flow. Again, you stop making mortgage payments or house payments. You help with medical bills. Since you have an additional cash flow, you can pay your medical bills. You can set up college fund for your grandchildren, additions or repairs to the home, fulfill lifelong travel dreams, that dream vacation you've been thinking of for many years. You can replace the income from a deceased spouse. That is a big one. You can donate to charity. Those are just some of the ways that you can use a reverse mortgage. Now, how does a reverse mortgage differ from a traditional mortgage? Well, here are some of the major ways. There are no payments to make, therefore you cannot lose your home for not making any payments. Let me repeat that. There are no payments to make, therefore you can't lose your home for not making payments. There are no income requirements and there are no credit requirements. Let's go about income requirements. Income requirements, I'm referring to the ability to repay the debt. When you get a mortgage, you have to show that you have the ability to repay the debt. With a reverse mortgage, it is different. Reverse mortgage, all you have to show is you have the feasibility to take care of yourself after your bills, but not repay the debt. And again, no credit requirements when a reverse mortgage. It's not about credit. Now let's take a look about how it works, more practical day-to-day how it works. So to do that, we're going to look at a forward mortgage and see how that works, right? With a forward mortgage, you know, in this picture on this slide, you're going to take your cash every month and you're going to pay your mortgage payment, right? So the cash or the money you have in your bank goes down a bit and your equity goes up because you're paying into your mortgage. Now, how does that differ in a reverse mortgage? It's again a reverse. You don't make any payments on your house, so you keep the money in your bank, you keep the money in your pocket, and every month, and your equity goes down because you're not making those payments. Your equity goes down, but again, you keep that cash for day-to-day living expenses, etc. Things you have to do. And what does that do? With a home equity conversion reverse mortgage, it can set you free from the day-to-day worries of life and give you a financial peace of mind. That is something as a senior, you deserve and need in your later years in life. Are reverse mortgages safe? The answer is yes, because a lender will never own your home. This is a non-recourse mortgage, meaning that the final amount will never exceed the home value because it is insured by the government's FHA program. And your heirs are protected as well. Even if you live 50 years and the market takes a tumble and the home is now worth less than the actual value is, it's an insured program. So that means it's going to make up the difference. So again, it's an FHA insured government-backed program. and your heirs are protected, and your estate will not ever have a bill for your mortgage. So let's do this in review. You always retain title to your home in a reverse mortgage or home equity conversion mortgage. This is a HUD design and FHA insured mortgage product. The funds from the reverse mortgage are non-taxable. I want to emphasize that a reverse mortgage is nothing but a mortgage in reverse or a loan in reverse. When you, or in the past, if you ever took a loan out on your property, you didn't have to claim it on your taxes, right? It's the same with a reverse mortgage. It's a non-taxable event. You can sell your home at any time. You don't have to ask permission for you to sell your home. This is your home. Take no other rights from the lender, takes no rights from you, with no prepayment penalty. The money that you use can be received in various ways and used for any purpose. I repeat, any purpose. There's no one watching over you saying, how do you use your money? It's your money. You can use it for anything you want. There's no debt ever passed to your estate because it is an FHA insured product, and you, again, retain all equity. You and your estate or your heirs retain all equity that you have at the time of your passing. So a reverse mortgage is that in all that. So FHA is, reverse mortgage is insured by the FHA, and it protects you and your heirs. Will reverse mortgage ever affect your taxes or Social Security? The answer to that is no as well. Because, again, money from reverse mortgage or home equity conversion mortgage is tax free. How much money you can receive on a reverse mortgage is based on a few different factors: the age of the youngest borrower, the FHA appraised value of the home, the current interest rate of the home, and what you owe on the home. That last part there is what you owe on the home. All factors in on how much money you can receive in a reverse mortgage. So how can you receive your money is a choice of that you have to make. You can either choose a lump sum, regular monthly payments of amount that you choose, a growing line of credit, or a combination of the three. So I want to expound on one thing: the growing line of credit. When you choose a reverse mortgage, home equity conversion mortgage, you can also have a line of credit left in the program. And with that, it will increase by the Fed funds rate plus 0.5% for as long as you leave it in there. I'm going to repeat that. It will increase. So if you have $100,000 and the Fed fund rate is 5%, it will increase by 5% a year plus 0.5%, so 5.5% a year for every calendar year that is left in there. And that's something that cannot be taken away from you. It will increase year after year on a monthly basis. So that is a benefit of the monies in a reverse mortgage. So if you're thinking this sounds great, then you're right. And the next step, or the first step in the reverse mortgage, is to schedule a consultation with myself. Let's go over everything we talked about. Let me answer any questions that you have that came up that I didn't answer in this presentation. And let's see if you qualify for reverse mortgage, you and the home, and as if it's right for you. Again, the first step is to talk with me. After we determine that, I'll create what's called a proposal, a reverse mortgage proposal that you have to receive. And then you will need to go through a counseling session with a government or a HUD certified counselor over the phone. It's about an hour, and it costs approximately $150 paid directly to the government agency to ensure that you are aware of everything we just talked about and more on the reverse mortgage program. But these are just some of the highlights. They want to make sure that you're aware of exactly what's going on, and then after that, you get us, if they are satisfied with your answers, that you're aware of what's going on, you'll get a certificate. With that certificate, that gives you the right or the permission to go into the reverse mortgage application stage with myself. Without that certificate, it can't happen. So First step again is talking with me, getting in a proposal, then going through the class and getting that certificate, and then starting the application process. So call me, 323-228-2736 is my number. It's on the screen, 323-228-2736. I'd love to talk to you, give you a free, no obligation consultation to see if this, again, program is right for you and if you actually qualify. My name is Larry Hughes, 323-228-2736. I look forward to talking to you and hope to see you soon.